But let's quickly move on. We have Monu Ratra with us, CEO of IIFL Home Finance, to talk to us about housing finance and how the trends over there are really playing out. Welcome, Mr. Ratra. Quickly talk to us about the latest with regard to the housing announcement by the government. How much of your book gets impacted by this announcement? How much of your book has been, over the last 10 years, you've grown your book from 2,000 to 25,000 crore. I'm talking about the core housing finance book. How much of that is part of this PM Awas, and how much will you benefit from it?
Thank you so much, Ash, for having me here. And I think it's a very, very welcome outcome which we got right at the first decision of the new government. I think it shows the conviction and the resolute conviction of the government continues for housing for all. So it's I think a great move, not only for housing but overall for the economy as well, because as the housing impacts so many other industries into this. If you will see, last time around when we had this CLSS scheme coming our way, we were able to have subsidy given to over 76,000 people worth 1,700 crores. We were amongst the top 5 players amongst the HFCs and the banks as well. So we really had a great benefit of this scheme. And I think currently the way we are placed, this scheme seems to be more focused in the urban and the rural side as well, or the semi-urban cities as well. Whereas last time it was majorly a PMAY urban setup. So I think they have gone slightly wanting to go to more to the deeper geographies, and this aligns with us very well, because last time around when we had this scheme, we were majorly in the urban areas and the metros and tier 1s, and now we have had a great expansion for our branches from about 130 to about 400 branches in the last 3 years. So we are very well placed to actually maximize the benefit out of the scheme. And we see that for whatever home loans we book, they would 90% of them should qualify under this scheme very much. And as 95% of our home buyers are all first-time home buyers, which is also a criterion for the PMAY, suits very well. So we expect going forward, it is not only benefit us in terms of the end costing to the consumer, but I think it should also encourage a spurt in the demand as well for people to going for houses.
Understood. I want to clarify this, Mr. Ratra. 90% of your loans will benefit from this scheme. Is that what you said? Did I hear that right?
Yeah. So I'm just saying is that the criteria is as follows. You have to be buying the first house, and you need to be, although the detailed contours of the scheme are still not out, but as far as the broader contours which are there, they seem to have focused on the EWS LIG segment. That's number 2. And number 3 is going to be the locations. So if we put all those 3 things together, first-time home buyers, 95% of our home buyers are first-time buyers. EWS and LIG category, again, we fund, again, 85-90% of them are on the EWS LIG. And the number 3 criteria is what locations they are going to cover. So we have the width of tier 1 metros and the semi-urban and the rural sector where they want to be. So as of now, what contours we have, at least the 90% of them will qualify. If there is any other criteria for them to, which they don't fulfill, that's a separate story once we have the greater details of it. But otherwise, as of now, all 3 of them fit the bill.
Fair. So that 90 could go down a little bit, no doubt, but 90 is a substantial number. Just in terms of the kind of growth you're clocking as well. You're clocking 30% plus on your AUM. What's the kind of roadmap you have going forward with regard to your loan book? You give us an overall picture of where your loan book will actually lie, say 3 or 5 years down. Can you continue this 30% plus kind of growth clip for the next 5?
Sorry, I just want to correct as far as our growth rate is concerned, because the Q4 results are also out. So the AUM growth was 25%, not 30%. But we expect at least it should be upward of 20% for sure, because as you know, overall AUM for us as an HFC is 35,000 crores. And amongst that, if I see the home loan book, it's about 25,000 crores plus. So this is a substantial number, and we have under 15 lakhs is our average ticket size. So we hope to be in at least in early 20s for the next few years.
Understood. So out of this early 20s, you expect 90% of the incremental growth approximately. It could depend on how the scheme's contours play out, but approximately maybe 90% potentially to benefit from the PM Awas Yojana scheme, which is expected to get launched.
Yeah, so the universe will be 90%.
Sure.
And as I said, the details are not out there for us to comment on the details, but here the universe which will have be 90%, and then how much we can convert will depend on the detailed criteria. Yeah.
Sure. Okay. I'll shift focus from PM Awas to maybe general business. I want to ask you, you have a few investors who you've onboarded, of course. You've diluted your equity. Your capital adequacy is 40% plus. Talk us through how long this capital is going to last you, and what could possibly listing plans be, if at all any, or is there a visibility on the next raise, if at all any?
Yeah. So I think we were very fortunate to have somebody like ADIA, the Abu Dhabi Investment Authority, to infuse this money into us in August 22, right? So that was quite a good confidence boosting event which happened. With the current capital adequacy as of March is about 42%, which we think is very self-sufficient, along with the internal accruals for the near future, 3 to 5 years. I don't think we need to really raise any dilution of capital. Really, we would need, because I think this capital, along with the internal accruals, we should be very well placed for that. As far as listing is concerned, usually whenever such investment comes, there is always a kind of a trigger to say that the listing should come on its own. But I am sure ADIA is a patient investor. So we will see all those, we will measure all the right things at the right moment. One is when we are ready, and also seeing the market is ready as well. So hopefully we should see that coming in future as well. But as of now, there's nothing really specified when this is bound to come, but eventually it has to.
Right, absolutely. And your capital adequacy 40% plus, for how long, at a 20%, 25% kind of a growth clip which you're guiding for how long should this capital actually last you? Because seems that profitability is strong, and therefore capital should also last you for quite a while.
Yeah, so that's what I said. Like this year we had a PAT of over 1,000 crores. The first time we crossed 1,000 crores of PAT at book size AUM of 35,000 crores. So as per our estimates, what our growth plans are, and along with the trajectory of the profits which we expect, we don't see next 3 to 4 years we need to raise any capital.
Sure, and therefore likely the IPO will also get pushed 4 years or beyond. Is that how one can look at it? Or you may be open to an IPO prior to that?
So I think as you see, IPOs can be put out for a couple of reasons. One is when you need the capital to grow your business further. It could also be some players wanting to unlock value as well. So I think it depends how the situation will unfold, and accordingly the action would be taken. But I think there are multiple, I would say, causes of the event of IPO. So one of the causes obviously to raise the capital, which we don't see we need. But you never know if other events get triggered, and we might have to prepone it for some reasons.
Sure. Now, I'm going to briefly try and get context and just talk about your parent a little bit, IIFL Finance. They are under some bit of pressure from the regulatory side of things. Do you therefore believe that, and two-part question, do you therefore believe that IIFL Home will be a larger focus in terms of growth even for the parent company? That's one. And second, does it change things for you dramatically in terms of geographic expansion? Around 60% of your loans come from 6 states currently. And therefore, do you believe that there is a case for you to grow faster in different geographies, given that there is this little bit of headwind on the parent side of things?
Yeah, so there are multiple questions you've asked me, so
Yes.
I'll take one by one. Right, going to the parent scenario, which is event is there. So I'm sure these are just operational issues, and they have already informed the exchange also. There was an audit which was taken up, and it has also concluded. The report would be submitted to the RBI, and they would take the requisite next steps. And I'm sure we're very confident that all the gaps have been plugged, and they'll be satisfied for doing the needful for the group to start getting back to business again. Secondly, if you see, it's a pretty IIFL as a group, if you'll see, has been pretty diversified in terms of lending also. At the group level, we also have a MFI, which is a very substantial business, and the NBFC, which does the unsecured SME and the gold loan business and housing finance. For now, there are four segments in which the group operates, which is the MFI and the gold loan and the unsecured business and the HFC. And if you will see, MFI is also very decent size in the industry itself. Gold loan also is a very substantial size in the industry, and housing finance again is a substantial size. So I would say it's not really something to say that one focus will be more than the other, but I think all the businesses are growing in their own pace, and they are amongst the leaders in their respective segments. I think that's what it will continue, and each business needs to grow further without assuming that what's happening on the other side of the businesses. So because we see this, the next 5 years with the new government formation, I'm sure we would see a lot of impetus on further expansion of retail credit, I think, in the far-flung areas of the country. That's what all our three businesses are focusing on, whether it's MFI or gold loan or HFC with the branch network which we have. Another thing which I'd like to say is, which I mentioned earlier, we've already expanded ourselves quite a lot in the last 3 years. We are present in 19 states and with 390 locations. And this few years now, we need to consolidate and go deeper. As you rightly mentioned today, our substantial business comes from 6 states. We would like to expand this much more. So I would say we have expanded in terms of the network. Now we need to consolidate and have more depth rather than the width. So next few years, we'll just be talking about branch profitability and more penetration of business in the same locations. We don't need to substantially increase the geographical footprint.
Understood. Sir, before I take it deeper into your own business, quick sense. Now that this report has been submitted to the RBI, how long, in your sense, will it take for the RBI to respond? Any kind of thought process behind that based on your experience?
I think I am as much privy to this as you would be. There have been prior instances of few other players which have happened, and I'm sure the RBI should take it sooner than better. But usually, if you see I can only comment from the fact that what other players' time has usually been taken. So keeping that parallel, I think 1 or 2 months is what it should surely happen, is what my conjecture is. But it's a personal opinion. I don't know exactly how much time it will take, but I can just say, from as you would be also privy to the public information for other players.
Absolutely, sir. Point taken. Point taken. We won't hold you to that. Sir, quick question with regard to both cost of borrowing and yields. Your yields are at roughly 11% and your cost of borrowing, and I'm talking about yields in the housing finance business core, not LAP, and your cost of borrowing is at roughly 8.25%. Do you expect some bit of expansion on that spread that you are making, or will you rely more on the LAP to make sure that the overall spread is maintained?
Yeah, interestingly, if you see our last few years, our trajectory, if you will compare us with other housing finance companies, especially in the affordable space, our share of housing business has actually grown in the last 3 to 4 years, whereas a lot of players other than us, their share of non-home loan business has been growing. So yes, rather we feel we have the headroom to grow a bit of our non-HL business, because today 77% of our book is home loan business, which usually for a lot of players is sub 70%, even the affordable space as well. So if HFCs run as an entire entity as a business together, and obviously there are some margins which have to be made in each project independently, but overall we are very nicely placed. If you will see, with a 1,000 crore profit on a 35,000 crore book, with ROAs of 4.5%, we are very well placed in terms of the financial performance. As we have expanded ourselves into footprint into the more deeper geographies where the expected yields, even in the housing business, are better than the hub locations or the tier ones and the metros. So we expect better spreads to come because of the growth of our expansion markets home loan business. And as far as non-HL growth is concerned, we have maybe 3-4%, we have a headroom to grow that. But for sure, at any point in time, strategically, we will not go below 70% in home loans.
Understood. So, last quick one. So, where should the yields be? Because I've been told maybe 10 seconds, 15 seconds, if you can answer that.
If you're talking about the yields overall as an HFC, we are above 12%. But also the source of borrowings of housing, pure home loan is different from the cost of borrowing of the non-HL business. Because we have NHBs refinance, which is substantial for us, and it also comes from the various DFIs we have been borrowing at a very competitive price. So I think we will continue this spread, and the non-HL piece will be over and above. So overall, we should only see increase in profitability and ROAs and ROEs.
Excellent. Thank you so much, Mr. Ratra. Definitely one to watch out for, IIFL Home Finance, and lots of interesting developments playing out in the housing finance sector. Thanks so much for coming in and chatting with us so candidly. All right, time to slip into a very short break.